Hey guys, it's Chris, and for this video I want to quickly share with you, this is actually going to be the first video I've done in 2021 here. Carlos has been taking care of the crypto stuff, and we've seen the huge jump in XRP the other day, and obviously the GameStop stuff and everything that's going on. And I felt like since there was a big question as to what is shorting, I really needed to take a step back from the business side of it, of what I do, and that's mentoring, the text alerts, the books and everything, and really just focus in on this channel and making it grow with you guys, because obviously the business side of it I can dedicate later on, because this is what I love to do, is help people. I was more wrapped up in creating a business into the whole model, and really I've lost touch on you guys. And a lot of people do say, well, in the market, if you're making plenty of money in the stock market, why do you have to have a business or try to sell something? And that's just, it just comes down to, well, if you love money and making it, and it's always a challenge, that's pretty much why you do it. But I'm going to step back for you guys, because obviously the shorting term was not even really known by the beginners. And that's really understandable. I mean, a lot of people don't understand that you can sell something before you buy it, or buy before you sell, or whatever the case may be. And that's the whole thing with stock options. A lot of people don't even know they exist. That's my go-to. That's how I make my money. And a lot of people even say that the returns that I show is just phenomenal. And then you have the naysayers that say it's just not possible. And yeah, it is. I mean, you really aren't buying a stock and then selling it for a higher price. And we know that the market, the returns are not that favorable when it comes to the retail trader. And if you're making at least 10 to 15% a month, not a month, but a year, you're doing considerably well. But when I'm doing trades that are netting me 30 to 300%, then you do get a lot of naysayers, and it's really based upon the contract price and how you're selling these things, or selling and then buying back. So anyways, I'm going to step over to my platform here soon and show you the account that I built from 5,500, and it's now up to around 13,000, and I think it actually just hit 14,000 right before the market closed. But you're going to see just the positions that I have on, and I'm going to try to go back and explain how my thinking, or basically my thought process is on how to hedge into positions, how to take profit off the table, what I'm looking at, and so on and so on. So really the new version of this channel is going to be helping you guys and learning through myself on what I'm thinking of when I'm looking at this stuff. Hopefully you're going to pick up on it. If you ever have any questions, just drop them down in the comments. I'll be glad to answer them. And just let me know what you want to see in the next video. But anyways, make sure you like and subscribe to the channel, and I'll see you over in the platform. Okay, so here we are. We're on my platform, and I want to show you my positions within this one account. I started this account with about $5,500, and I grew it to, I think, about 13,000. Now, I've been doing this for about 6 months with this account. I've been in the market, as you may or may not know, for about 10 years. I've been doing this right around the same time I got into law enforcement. I'm no longer in law enforcement, but I got into it for the fact that I wanted to make a better life of myself. And we all know that, unfortunately, law enforcement does not pay the greatest. So I wanted to produce a second income. And I actually had started a business, or a couple businesses, such as e-commerce. I sold that to an investor out in California. And then I really dove into what I love to do, and that's learning the stock market. It took a while, I'm not going to lie. It took about 7 years, and I'm still learning. But the reason for what I wanted to do with the Investors Club within Facebook, and then also even this YouTube channel, is to really dive in and teach you guys the fundamentals and the proper way to invest. There's a lot of people out there teaching this stuff but not actually doing it. I'm not going to get into detail. It's not the sole reason for this video. It's to pick on those guys or call them out or anything like that. I just want to make you aware of what's out there and what exists, what's fake and what's real. So anyways, this is my, like I said, $5,500 account. I started about 6 months ago, and I built it up to about 13 grand. And I'm going to show you the positions that I believe in that work. And this is not, I just want to make a quick disclaimer. I'm not a financial advisor or anything like that. I just am a trader and investor. and I do this for a business also. You can check it out, investingwithchris.com. But what I really want to step into is helping you guys learn this and take the business side out of it. You know, I don't want to sell you ebooks. I don't want to sell you a course. I don't even want to sell you my mentorship program, even though that would be nice because I really think that's going to help you. But I think that I can make this easy enough for you guys to really understand what I do and how to correctly and properly invest. Okay, so as we all know, one of the things that we really want to highlight is making our money work for us. You know, I was in a position where I was scared to drop down a couple $100, and now it's a couple thousand, and I get that. You know, if you're a beginner trader, you don't have the size of account to lose a whole lot of money, but you also have to understand, in order to make any kind of money, you risk it, and risk comes with about every reward that we do in our life. If we're working a 9-to-5 job, we're risking literally the confidence in our employer that they don't go under, they don't go bankrupt, they shut their doors, and we're out of a job, right? You go and buy a house, you get a mortgage payment, you buy a car, and you're assuming, you might not even think about this, that your employer is a safety net. But really, it comes down to how good of an employer or boss or entrepreneur they are in order to keep that business running. Even a government entity. You know, I worked law enforcement. I could have got laid off at any time. As a matter of fact, I did. On one of the previous sheriffs, I got laid off. And Jesus, you're telling me, you know, a 9-to-5 is a security net? No. So I really started hammering down on my own finances, how I can make money for myself and not be dependent on anyone else other than myself. So we seen the whole GameStop shortage, right? The short, everyone wanted to know that was beginning, or a beginner in investing is, what is shorting? What does it mean? And it literally just means borrowing a stock or borrowing shares from your broker. Now, a broker is what I use. This is TD Ameritrade, and this is their platform, Thinkorswim. A broker has an inventory, right? So many lots or so many shares, an inventory of what they can and cannot do with certain shares and stocks and whatnot. And it's us, the retail investors, hedge funds, whatnot, are allotted so many. The bigger accounts, then obviously you have more buying power, more selling power, and it's been known that hedge funds can manipulate the market. Now, I don't want to accuse any hedge fund one in particular, but I do want to say that there is market manipulation out there. It does exist, it's real, and it's a bunch of bullshit. However, what we seen with GameStop was literally the retail buyers, individual traders, investors fighting back, okay? They short squeezed the stocks that were short on GameStop, and they forced these hedge funds to finally buy back or cover their positions that they shorted. So when you borrow something, you short it, and shorting is not always a bad thing. Okay, I'm shorting a call right here, and I'm going to explain this, and then I'm buying this long call in return, or I bought this long call and then I shorted another strike price or a different contract much sooner. And I'm going to get into that in a second, but the short sellers are not always a bad guy. Don't think that anyone who shorts is technically a bad guy, or you need to look at them the wrong way. As the market moves up and up and up, it also needs to crash back down, or you have these waves that eventually fall back down. And if you're a trader, I'm not saying do this because you're letting yourself go in undefined risk, and you can lose infinity. It's not highly likely to do that, but it can happen. As the stock goes up, you're buying, you're selling, and at that high point, it's hindsight, you sell. And then when the stock drops, you get to buy it back cheaper, and you take the difference of the two, right? You sold it for $80,000, and you get to buy it back for $40,000. That's a $40,000 profit. It's almost like going out and, for instance, going to a car dealership and saying, I want to borrow that car, I want to sell it, and then I'll buy another one back for a much cheaper price to replace it. Now, that's kind of a bad analogy, but if you want to put yourself into the car market world, it's really simple math. There's nothing too complex about it. You're literally borrowing shares from your broker, and you need to give them back at some point. The goal is to buy back lower and then give those back to them, and you keep the difference. But sometimes when you have to cover like these hedge funds, you have to buy it back at a much higher price than what you sold it for, and there's when you incur a loss. So anyways, what I want to show you in my positions are, these are the 6 positions that I'm currently in. 2 are long with actual shares bought, and you can see these, Nokia and then Coca-Cola. And in Coca-Cola, I'm down about $393. And this long call, or this short call, sorry, is 21 days to expiration. That means I'm in a contract, it's called a stock option, that I have 21 days for this to work in my favor. I do not want Coca-Cola to go up above 54, in theory. However, I bought this stock at 53.65, and then I sold a covered call on it at 54. So what that says is, if the stock goes to 54 or higher, I have to let go of my 100 shares at 54. However, I also take in the premium of, or I take in the difference of the 100 shares of what I bought them for, and at 54, which is really not that much. As you can see, I bought it at 53.64, and then it's going away to me at 54. If the stock continues to go up, okay, if it breaks at 54, I have to let them go at 54. But here's where the magic happens, and here's what I love to do. I'm taking in a premium. Now, it's not much, not on this one, but it is kind of replacing the dividend. Instead of waiting for that dividend, you're technically making a monthly income by selling a contract to say, if this stock goes up, okay, I'll let it go to someone else, and on the other side of the market, whoever bought this contract, I'll let it go to them for 54. But at the same time, while they bought the contract to be able to do that, I sold it to them making $15. Now it says 15 cents, but for every one option contract, you're messing with 100 shares. So I can sell one option contract per 100 shares. We times that by 100, and that gives us a $15 profit. So no matter what, I make $15. Whether this goes up or goes down, I make $15. The worst case scenario, and what you're seeing now, is if Coca-Cola goes down and continues to go down, then yeah, I make the $15, but then I still keep on taking in this loss that the stock goes down. Now, Coca-Cola, we've all known Coca-Cola to exist for over multiple decades. Is it likely for it to go bankrupt? No, I'm not too worried about that. But I'm just saying this is the worst case scenario. Now, same thing with Nokia. I bought 100 shares. It's down, as you can see, $67. But then I made up for it. It's over 105 right now. It's in the negative because what's going to happen is I bought these shares at $4.92, and then I sold the 3, which is actually I bought a long contract trying to do the same position. Sorry, correction on that. I did not sell a covered call on this. I'm waiting for this to go up. Nokia's kind of been hovering around the same price for a while. It was one of the stocks they were trying to pump. As you can see, it went up to 9. But if I look back in the history, the lowest it's ever been is 234, and as you can see, it's kind of been in this 438 range. So I literally bought it to hold to see what it's going to do. I could go in here into the trade tab, go to Nokia, look at, I usually sell covered calls anywhere from 35 to 45 days out. This one's at 42. We know that I bought it at $4.90. I can go up here to 5, make $22, the difference plus the $22. Or I could sell at 12, risk giving up my stock at 6, which is still a difference between what I bought it at $4.90-ish to 6. Or it could just drop and I take in this premium anyways. Another thing that I could do, and I'm not going to get into this too heavy, is I could buy a put at, for instance, 4. If it drops below 4, then I can sell my shares away for 4. I can hold on to this contract and just buy it back for more and save my shares, or whatever the case may be. Those are just a couple of options, and hence this is stock options. They're derivatives. They're contracts on shares, or they don't even have to include shares. You can literally buy and sell and buy stock options all day long for an income, and that's what I do. Now, here is the magic, and this is something that's called a poor man's covered call. This one has made me $1,000 on the long, and then the short is about $240. It's up $32 today. As you can see, its P&L today is 25. That's what this column is for. And PL open, this is since the position was opened. As you can see, I've made a total of $868 on all of these. If you combine the losses and the wins, I'm up about $867. So if you do the math, for instance, an $867 profit divided by I think I said around 13,000 right now is about 6% so far. Now, utilize on capital is, I think I have about $1,000 setting right now. I'm not tied up all the way. I like to keep some cash on hand, obviously, but you're going to treat your stocks like a business, okay? So this space program, Virgin Galactic Holdings, it's basically saying they're going to take flight at a commercial. They're going to let people go up for a fee. I think a couple days, spend your time in space, drinking martinis and looking at Mars. I don't know why the hell you'd ever want to do that. But anyways, they're going to be doing that. And so I bought a long call. This call cost me about $3,600, $3,650 as you can see, and it's made me $1,000. So even with that being said, I made a 30% return. Literally, I bought this on January 28th. So just a couple days out, a little over a week, I've already made 30%. And this is where you guys really need to focus in on how I promote or show you my percentages on return of investments. Okay, a lot of people say if you can at least make what the market makes, you're doing phenomenal, especially as an individual trader. If you're making any more than that, it's a phenomenon or a phenomenon. Phenomenal. I'm just going to delete that part. You're basically are. It's one of a kind, right? So I bought the contract long. It's a long position, and in return, I'm also selling at a much. This is fairly out of the money. As you can see, it's 54, but it's 42 days out. The initial setup was about $785. I've already made. This was on the 4th, so literally just yesterday, I made $240 of that back. So I can buy this, close it out. I can let it roll. Since it's Friday, I'm going to probably let it roll because the time is on my side when you're selling contracts. When you sell, your theta is on your side. So theta means time decay. Each day that goes by, this contract becomes less and less that I can buy it back for and therefore make even more profit. Overall, I'm looking to make the full $785, but as you all have watched me over time, I always say if you can at least make 50% before your expiration, say this is 20 days left and I've met 50% of the $785, I'm going to take that profit off the table and I'm going to start looking at what those premiums are again within space. I know I'm probably talking really fast and it's getting complex on following, but you're simply you're buying one contract and selling another contract against it. What happens is if this 85 strike price is met, I have to let go of this whole position. But I've wrote this so far out that I'm going to make money on the difference of the 8 and the 85 plus the premium. So it's a really good setup. It even gives you the break-evens when you initially get in these poor man's covered call. And why they're called a poor man's covered call is because you're not going out and buying 100 shares. You're technically reducing your cost basis by just buying a contract. The problem with contracts is they expire. If you just go out and buy shares, they never expire, right? Unless the stock goes out of business. But you can hold on to your position forever. These contracts expire, so they have to work in our favor. The good thing is, you can see these are 700 days out. I have almost 2 years to have this work for me. And right now, just within a week, it already has. Now, I did say you could just go out and buy 100 shares and then sell covered calls against it, and it's usually cheaper. But as I showed you, this position was actually more. I usually tell my rules, or my rules are in place where I don't like to pay more than 50% of an actual position for a contract. So meaning this would really be $800 to just go buy 100 shares at 8. And then I would probably not pay more than $400 for it because I want to basically get this stock for free by selling short premium on it. But in this case, it's really good premiums. Implied volatility is up, and as you all know, implied volatility is a seller's market. That's where really the premium is high in quality. You really get a lot of money for the strike prices. So anyways, you're basically selling these 35, 45 day out contracts, and you're making almost $1,000. So off of $3,600, $1,000, 30% return. Yes, I would say go for it. I'm not a financial advisor, but I'm doing these, and that's what I said to myself is go for it. If I can make that kind of return off of, I don't know where else you could spend $3,000 and sell for $1,000 profit, other than maybe the car industry. Buy a cheap car, fix it up, clean it up, detail it, and sell it for $1,000 profit. It's a pretty good return. But anyways, I'm just saying that you guys now see my portfolio, what I do, poor man's covered calls. I do have some longs here. Tesla, I bought this, just kind of mess around with it, get to know the stock. As you can see, it's only down $17. It's been up $10 today. I bought it in about $8.77. So with that being said, this is pretty much it, guys. I do go long, I do go short, depending on the variations of what the premiums are giving me. I just want to show you that the kind of returns that are in existence, that is not too good to be true to exist. I mean, literally, guys, I could get out of this space position, but I think it's going to go much higher, and I like the premiums. I keep making monthly income off of this. This is one of the ways how I do it. And as you can see, just within a couple of days, I'm already up $1,200. The other day, the day before yesterday, it was up $1,400 or $1,500. It's dropped back. I got out of one of my shorts. I bought it back for a profit, and then I got back into another short a little bit farther out, just because it continues to grow on us. And I just want to keep the stock as long as I can. But anyways, this is just a brief overview of my portfolio right now in this $5,000 account. This is one of many that I have. And as you can see, this is how I basically am full-time trader now. Selling covered calls, selling puts. We'll get into that later. If you've got any questions, drop them down below in the comments section. And that's pretty much it for this video.